Hi, Olivia.
Hi.
Olivia is Managing Director of our Prime SMSF division. And as I sort of said in the intro, I was having a chat to Olivia last week, and she was indicating just the volume of activity and questions she's getting around setting up a self-managed superannuation fund. And Olivia's spent pretty much most of her life in the SMSF space and is an absolute expert and appears on the Ellen Collar Ask Alan as well. So she's obviously highly regarded in the community of SMSF and knows pretty much everything about it. So we're very fortunate to have Olivia presenting today just on that particular topic. But I thought it was probably relevant to talk about because people are questioning or asking about SMSFs. You know, and I would have thought that was interesting in light of COVID. And I suppose what your response was, Olivia, was very much around saying they wanted to have a little bit more control over, what's happening with their superannuation money rather than sort of, being into a fund or an industry fund. So I'm really looking forward to listening to, what your sort of observations are and why people are doing it. But also it'd be worthwhile you probably giving a bit of background on what an SMSF is and why it exists. So I'll hand it over to you, Olivia, to chat.
Thanks, Matt. So I think the first thing to note is that in times of uncertainty, people really do want to take control of their super. For most people, most Australians, super does form the second largest asset that they have after the family home. So for many, protecting that asset and being more engaged with it is becoming more important, especially when financial markets are uncertain. I'm just going to pull up my presentation. Won't be a moment. So today's information is general advice only. If you'd like further information or if you'd like us to discuss your personal needs, please contact us. So to start with, the first question I get is, what is an SMSF? So many people don't actually realise that a self-managed super fund is actually a form of trust. So an SMSF can have up to 4 members per fund. And if you have a balance in the fund, so if you're a member, you also have to act as a trustee. So acting as a trustee means that you are responsible for making decisions that happen to the fund, and you're responsible for making sure that the fund is fully complying. But the sole purpose of setting up a self-managed super fund must be to provide for your retirement. So that's in a brief overview what is an SMSF. So given it's a form of trust, it has an ABN, it's got a tax file number. So we need to prepare an annual set of financial statements. And we also need to, any transaction that happens within a self-managed super fund needs to happen via the actual bank account. But I'll talk a little bit about that later. So let's talk about why self-managed super funds are so popular. So the number one reason that people set up self-managed super funds is that they have control. And that's probably, Matt, to be honest, why at the moment everybody, we're being inundated with new fund setup, is that people are saying, I want to take charge of my super and I want to make sure that I'm going to protect it, especially in these uncertain times. But self-managed,
which is a good point, because you raised the point about the fact that super is a great vehicle for creating wealth for your future, and it's very tax effective. And then the second point you're making now is that, why an SMSF rather than sort of other forms of superannuation saving? And really what you're talking about there is the control over your retirement plan is why they're doing it. And also some of the other flexibility that you actually have in terms of investment, which you'll get into, obviously.
Absolutely. So at the moment, to be honest, one of a key question I'm getting from SMSF or potential SMSF trustees, a lot of them want to invest in assets that are non-traditional, such as precious metals, or even just put their money in cash because they're concerned about what's happening at present. So SMSFs actually provide the most flexible range of investment offerings out of all superannuation alternatives. So in an SMSF, you can invest in direct shares, you can invest in cash, you can invest in managed funds, but you can also invest in direct property or commercial property, which you can't in any other superannuation vehicles. And you can also invest in alternative assets such as precious metals, which I've mentioned, or even cryptocurrency, which for some people, they're happy to have a bit of a dabble in that space.
So precious metals being diamonds and gold, is that what we're
gold and silver? It's gone nuts at the moment, and I think it's because when people are concerned, they want to have that, you know, that they want to be able to have that tangible feeling, that touch and feel, which is why some people prefer property as opposed to direct shares. But the benefit of self-managed super funds is that it's not just it is obviously the most tax-effective vehicle, but if you hold shares in your own personal name, you can actually transfer them into your super fund, into that very attractive tax environment via what's called an in specie contribution. So that's great. If you're holding assets in your own name, let's put them into super, where when you eventually dispose of them, you're going to have a very positive tax environment. But SMSFs can also benefit from borrowing strategies. So I'm going to talk about property a little bit later. In an SMSF, you can also pool your super. So the most common type of SMSF in Australia is honestly two spouses, so husband and wife, or two people, and both of them put their super into the SMSF. It's tracked and treated entirely individually, so much as you would in any other super vehicle, your super is preserved, and any capital gains or losses is generally applied based on your percentage in the fund. In SMSFs, you can make use of pension strategies. So literally converting to a pension in a self-managed super fund is an accounting transaction. You don't actually have to dispose of the assets in order to do so. And for SMSFs, they can actually be cheaper than alternatives, especially if you've got two or three or four people in the fund.
So you can also add your kids too, is that right, Olivia, in terms of, because that's a common question we get asked as well, it's up to 4 members. So as you said before, you might have 2 parents and then you might have a couple of kids in there too, if you wanted to.
Absolutely. And, you know, you can help them focus on or teach them about superannuation and its importance and educate them on investments in an early stage. But self-managed super fund members, it's been proven, are more engaged with their super. The amount of people I speak to that don't know what their super fund is actually at, or how it's performing, or even how they're invested is, you know, it just is the way that it is with many Australians. So when you've got a self-managed super fund, generally you've got direct access to your investments. You're making the decisions, you're reviewing it on an ongoing basis, you're looking at how your investments are performing. So you're actually making sure that you're making the most of your retirement savings. So what we've got here is just a quick snapshot of our online portal and what people see when they're actually investing in an SMSF and they've got that direct control. Another key benefit, as I talked about, is being able to invest in property. So a lot of business owners use the opportunity to acquire a commercial property in their SMSF, and then you have the ability to rent that commercial property back to your business, as long as it's on a commercial basis and it's at what's called arm's length. Literally, you can, and I'm going to talk about commercial and direct property, because there's a lot of people out there who actually prefer direct property. As I've mentioned before, you can actually borrow to invest in property in your SMSF. So I'll quickly run through the measures to do that, but basically you need to seek qualified financial advice from a financial advisor. You literally find out how much you can borrow. You then invest in the property and then arrange insurance on that property. So I think,
which is an area that we've done a lot of work in historically, and it is very attractive for business owners that want to actually acquire property, and it's a tax effective way of doing so. But so, you know, obviously there are requirements around that, and they're pretty stringent requirements, and that's why, as you say, it's important to get some advice on it, because there's especially around the borrowing aspect of it.
Yeah, 100%. Banks actually won't give you a loan unless you can provide them with a formal statement of advice to provide evidence that you've gone and sought advice on the issue. But a few things to note about property in SMSF is that you can't actually rent a property to a related party. So, you know, that's literally any family member other than a cousin. And the only exemptions to this are business real property or certain exempted unit trusts. So to just give you a quick definition of business real property, it is literally a business that is wholly and exclusively used for conducting a business. So it's based on the use of the property, not actual zoning, and it doesn't need to be a business related to the fund members. So if SMSFs are that easy, why doesn't everyone have one? Which is a really good question. I know Matt's got one, I've got one, and we enjoy running them. But the trustee obligations, so if you're going to run an SMSF, you've got direct control over your bank account and you've got direct control over what you actually do in that fund. So the ATO are going to put some pretty tight rules and regulations around what you can and cannot do to make sure that people are actually doing the right thing. So as a trustee, you need to make sure that number one, you're complying, everything that you do is in line with your super fund trustee. So like any form of trust, there's a legal trustee that sets out the rules of what you can and cannot do. You need to be in line with the Superannuation Industry Act, there's the Superannuation Industry Regulations, Income Tax Assessment Act, and I can go on and on. So that's just to provide you evidence that SMSFs are very attractive, but they are a highly regulated area. But if you're dealing with an expert that's going to handhold you through the process, those obligations actually become really quite simple.
And that's one of the reasons why, because of this complexity, Olivia, one of the reasons why we've got a specialist division nowadays, because, you know, it is getting more and more complicated to have a self-managed super fund. Okay, so that is probably why a lot of people may not want to get into it, because of the complexity of it all, that they don't want to have that control or the flexibility. But some of it is around this sort of the complexity itself. And it's like anything, you know, tax is a complicated area of the law. There's no doubt about it. And that's why, you know, tax agents and advisors exist. But this is becoming more and more so, because really it's an area where, you know, where you're funding for your future, and the government want to make sure that's the case. So you're not relying upon pensions, government pensions at a later date. And that's fundamentally why they're so regulated. But having said that, you shouldn't be scared about that, because that's why advisors like Olivia exist, and why we have specialist departments in our organisation to support you on that sort of type of stuff. And so, you know, it seems like it's very complicated, but the actual doing and the experience is different.
Yeah, absolutely. And look, in the old days, it used to be very much a case of look after your SMSF on your own, take your shoebox of documentation into your accountant at the end of the year, and they'll prepare the financial statements and tax return. All of that's changed now. We've got a live service. So we actually, we handle all of the administration for our clients. We provide them with daily online reporting. And literally, we take care of the administration burden and the compliance and legal burden in running an SMSF, so that our clients can just focus on where they're going to invest their money and how they're going to get the better returns. So the key things that people need to understand before establishing an SMSF is that they must act honestly in all matters concerning their fund. So they need to exercise skill and diligence in managing their SMSF, and they need to act in the interest or best interests of their members at all times. So a number one key thing is that people need to keep the money and assets of their super fund completely separate to their personal monies. A lot of people don't actually realise that. So any investments that you make in an SMSF need to be in the name of the SMSF and paid for via the bank account, which I mentioned before.
It's also really important too from an asset protection point of view to Olivia, because if you don't get that right, and as business owners, if you are business owners, then those assets can be at risk if, you know, and caught up in other areas that are unintended. And that's why we're very diligent around even, you know, assets protected in companies and trusts, and also superannuation funds, to ensure that, you know, we are segregating the assets from a risk perspective. So not just because it's a government requirement, but just because that's good asset protection planning.
Yep, 100%. As an SMSF trustee, you actually need to develop and implement and review your investment strategy on a regular basis. So we actually provide a template and facilitate that as part of our service. But SMSF trustees need to consider if the fund needs to hold insurance cover for its members, and we're going to talk a little bit more about that in a minute. You can't enter into contracts or behave in a way that hinders anybody from actually performing their duties. And the key fact is, you can't actually access your super fund money early. So you do still need to wait for what's called satisfying a condition of release, or basically until you reach retirement before you can access your super fund money. So if you're going to set up an SMSF and plan to access your funds early, the ATO will be onto you, and the penalties can be as extreme as actual jail time. So it's really important that you do the right thing if you're going to set up an SMSF.
That makes you nervous, that word, jail.
Well, it's like director's duties. It's like anything, you know, you need to do the right thing. So to set up an SMSF is actually really easy, especially if you're partnering with someone to do it for you. Basically, they establish a super fund trust deed. We arrange all of the compliance documentation to actually establish the fund. As we mentioned, it needs its own ABN and TFN. Once you have that, and once you've established the bank account, then you can arrange your rollovers of any existing super that you've got. You can also arrange for future employer contributions to go into your SMSF. But once the money is actually in your cash account, that's generally where the fun part starts, where people sit back, they look at their investment strategy and go, okay, where are we going to invest this? And the thing is, just because you've got a self-managed super fund doesn't mean that you actually need to go it alone. You can still engage an investment advisor to give you advice on where you actually, what asset allocation you have in your fund, but also how you invest it. And all of the expenses relating to an SMSF are paid for out of the actual super fund. So a lot of people don't realise that. In terms of annual obligations, running your SMSF on an ongoing basis can be relatively easy if you're using an administrator and you're not actually handling everything yourself. But pretty well, on an annual basis, SMSFs need to prepare a set of financial statements, just like any other trust. They need to have an income or an annual return, which is basically the return to the ATO. There may be tax payable or tax refundable, depending if you're in accumulation or pension mode. You need to continually review your investment strategy just to make sure that you're sitting back and actually looking at, is my fund performing? Are my assets in line with what I was planning to do? How long have I got to retirement, etc. And then on an annual basis, because you have that direct control and direct access to your SMSF, the ATO require you to appoint an independent auditor and have an annual independent audit. So literally, unlike with your personal tax, where you can go to your accountant and just say, here's my spreadsheet, prepare my tax return. With an SMSF, we actually need a copy of every source document so that we can provide it to the auditor. So that's part of what an administrator will actually handle for you.
I think it's a fair point to make in terms of the fact that it's still like, you know, a normal year-end process that you would go through to do your, you know, your company accounts and that sort of type thing, individual accounts. The extra regulatory burden is the fact that it actually has to be independently audited by a provider, and we separate that for, you know, governance perspective. And so, you know, it's important that you're aware of the differences, but it feels exactly the same process that you would go through if you're doing year-end anyway, is the point I want to make.
Absolutely. So one thing that a lot of people don't realise, which I'll cover really quickly, is super and insurance. So part of the Superannuation Act actually requires SMSF members to have an investment and an insurance strategy, as I mentioned briefly before. So the 5 key strategies are making investments and identifying what your likely return is going to be, diversification, liquidity of investment, so that's the ability to sell down your assets, especially that becomes important if you're in pension mode. So the ability for the fund to meet prospective liabilities, so that may be tax liabilities or pension payments, etc. But the one I'm about to talk about now is the need of any members to access fund insurance. And that's important because most superannuation members have life and other forms of insurance attached to their current superannuation benefits. So we're seeing self-managed super funds established where people are rolling over their entire rollover or their entire balance from their existing super provider, not realising that part of that balance and part of the fee that they've been paying covers insurance, which is very important for many people to consider. So when you hold, SMSFs can hold insurance in them. So that basically means that the SMSF can hold an insurance policy in the name of the trustees on behalf of the SMSF. And if there's an event, the insurance payments get paid into the superannuation fund. One of the main things to note here is that when insurance in an SMSF is actually paid for by the superannuation fund money. So for many people, that's actually quite attractive because they want to hold insurance but can't afford to do it or pay for it in their personal names. So your superannuation fund can do it. Even better, if you make extra contributions to your super fund, then literally you're paying off your insurance benefits using pre-tax dollars, which I won't go into because that's getting a little bit more complex for what we're talking about.
But it's a good point to make. And the other point to make there is that it does work for some insurances like life insurance and I think TPD, but trauma and income protection are other common forms of insurance, I think typically sit outside of super. Is that right?
You're right. So that was my next pro tip.
Oh, there you go.
Mr. Murphy, is that TPD should not be held inside the super because if you actually do need to have a payment payout, it will go into your super fund and you can't access that unless you satisfy a condition of release, such as you've reached preservation age or you're at retirement. So there's certain policies or insurance policies such as income protection or TPD that should be held outside of super.
Yeah, and TPD is total permanent disability insurance. Yep.
Yep, thanks, Matt. So there's 3 ways that you can actually reduce your insurance premiums. And a lot of people, if you haven't sought advice, these are going to be 3 awesome tips for you. So the first is that you can extend your wait period. So if you actually have sufficient savings that in the event of something happening, you can cope for 3 months, just as an example, then by delaying that wait period, your premiums can drop significantly. The other one is that you reduce the benefit period or that even you pay your premiums annually upfront. So most insurance providers will provide a discount of around 10% if you're paying your premiums in advance. Mm-hmm. So if they're held in your self-managed super fund, 10% is 10%.
Cool.
The next question is around costs, because there can be some misconception that SMSFs, what's it going to cost me?
It's a $1 million question, isn't it, Olivia?
What is it? Yeah, the $1 million question. So literally, to establish a self-managed super fund, there's a once-off cost, which is actually payable by the fund, and that involves the SMSF establishment. So generally, that includes the SMSF trust deeds, so all of the legal documents to set up your fund, the application for the ABN and tax file number, literally all of your templates that you need to make sure that you're fully complying. Coming to that. There's 2 types of trustee structures for an SMSF. One is an individual trustee structure and one is a corporate trustee. And I'm not going to go into too much detail about that, but literally if you're having a corporate trustee structure, there's an additional $895.
That's one-off cost, obviously up front.
Yeah, but thereafter, literally from $2,200, you could be running a self-managed super fund. And as we mentioned before, if you've got more than one member, if you've got 2 members in the fund, those fees, the fees can be quite compelling. But the most
obviously, these are indicatives pricing because obviously the more complicated funds typically will actually go up in fees. But this is probably the normal is probably.
Yeah, this would be probably the average fee that we'd see with our clients.
Yeah.
And fees typically relate to the number of assets that you hold. So if you're going to hold sort of 20 or 30 unlisted investments and 20 or 30 direct shares, just as an example, then the time involved to report on those and account for them and satisfy the audit is going to increase. So this would be generally an average fee and a base fee, but anywhere from sort of 2,200 to 3,000 is considered average. The ATO state that the average SMSF fee in Australia at the moment is about 3,700. So we're actually below that, but generally most clients, that's still pretty compelling, especially if you're splitting it across several members.
Yeah.
So I'm going to finish up today with a quick thing. If you are interested in SMSF, please feel free to speak to your client manager in PABA or to contact me and the SMSF team directly. But setting up an SMSF and running it if you're interested and you're working with us, is generally, actually, most people find it really quite easy.
No, it's good indeed. And, you know, it's one of those areas where, you know, should be part of an overall strategy. And that's why, you know, as your advisors should be, you know, spoken to first and foremost, just to see whether it fits inside of the overall strategy from that perspective. And that's when we get Olivia involved. So we very much appreciate the fact we've got that, the level of depth of knowledge and experience in Prime to have Olivia to be able to cover off on that sort of stuff. So we're very, very grateful from that point of view. Just got one question, Olivia, from Gavin, who's just asked about, do any dividends have to go back into the fund? And I'm assuming that means that the assets would have been held in the fund itself. So
yeah, so absolutely. What happens is when you set up your investments, any investments that you make are paid for out of the fund bank account, and then any investment or income that you have or any super contributions all come back into the SMSF bank account as well. So that's pretty straightforward.
Yeah, cool. Look, it's been fabulous once again today, and it's good to get an understanding of, you know, the self-managed super fund in light of, you know, uncertain times, and it's been great that you've covered that across, and now I understand why people are starting to look at this and saying, hey, I would like to have more control. I would like to be able to invest into things that I believe, you know, are going to hold me in better stead in the future in terms of, you know, funding the retirement. So that makes a huge amount of sense from my perspective. And, you know, I think it's great. And I know that you love talking about super all day, every day. So if anyone's got any questions or inquiries afterwards, feel free to speak to, you know, your person in Prime, and then also speak to Olivia as well. So, but once again, thank you so much for your time today. And also for Paul, for his time in terms of giving, because, you know, it's very valuable what they do, and they put time and energy and effort into these presentations for me to convey as much information and knowledge to our clients and to our community. So I'm very grateful from that perspective. And you know, the offer extends to everybody. You know, I've certainly felt it a number of times in terms of, you know, our clients that might be struggling a little bit with, you know, COVID. And really, we're here to help. And that's the reason why we've created these forums, is just really to be here to help. But we're here on an individual basis. And so, you know, now is the time to really reach out. Now is the time to think about strategy, thinking about how do I navigate through the complexity of this, but also come out stronger and thrive and hopefully ride the wave of future sort of economic benefits. So, you know, please reach out. We're here to help, and we want to be there for you as our clients, but also as, you know, leaders in our business community. So just wanted to say that too. Anyway, looking forward to our next session. It's going to be a good one. I'll release some details next week in relation to that, and that'll be held in a fortnight's time as the rhythm at the moment. So thank you once again for joining us, and we'll look forward to seeing you next time.